Happy Thursday. Nice. I'm chilling somewhere tropical in an undisclosed tropical location to escape the snow. I'm scouting out some possible vacation place. So, very nice view of the ocean and mountains. But up in Canadania, there's like a foot of bloody snow. Oh my God. So I'm here for a week. I'm on my travel computer, so you have to bear with me. Nice. Very nice. Tezos, man. We keep getting hit with these bullish punches on Tezos news. When's the knockout? Just waiting for the knockout. The breakout of new highs. The audio's fading. How's the audio for everyone else? Is it fading for everyone else as well, or? Okay. Okay. Well, let me just do before I start, I'm just going to do a quick speed test just to see what my internet speed is. I think it's okay, but I just want to make sure. Make sure my upload speed's okay. Holy smokes. Okay. This is faster than my home connection. This is 340 MBS per second, or MB per second. Holy crap. And 14.5 upload. That's a lot faster than my home connection. So I think my internet is good. Wish I had that kind of internet at home. All right, where am I at right now? All right, perfect. Just going to record this to the cloud. All right, crypto market update. We're going to start with Bitcoin, and we'll look at Tezos, and then we'll look at some other altcoins. Look at my hypothesis on the markets, at least my current hypothesis on it. So, looking at Bitcoin, interesting thing is I posted something in the room about a possible bull flag. Now, it's a bull flag until proven otherwise, right? Like bull flags, they can be invalidated, but they're not necessarily confirmed, right? So they're continuation patterns. So essentially what ends up happening with them, I'll just kind of break this down, is, you'll get an impulsive bullish move. So obviously you've got these two candles here that gained like 30 or 40%. But obviously sellers are going to step in, right? We talked about how, 10K was a magnet area, so on and so forth. There's sometimes it acts as support, sometimes it acts as resistance. That just a general zone, anyways. But seems like the price is being gravitated towards us. The Bitcoin battle right now is for the 10K line. 10K is where the magic happens. 10K is the line in the sand for this bull trend. In order to make progress, in order to win the battle, we need to conquer 10K. The bulls need to conquer 10K. That's the round emotional 5-digit level. There's the euphoric level of 2017, where as soon as we crossed 10K, people just lost their minds and FOMO'd into Bitcoin. But it was hot air, and we talked about how 10K right now is a lot more sustainable. I mean, we've been kind of gravitating over under this area now for 4 months at least, right? So, see a little bit of a bull flag. So you've got this impulsive move, comes up, hits resistance at 10K, and then sellers step in. I mean, that's natural, right? You get it's counterforce. Right? You get these big green candles in such a short period of time, not sustainable. People are going to take profit. Bag holders who didn't cut out are going to cut out and sell and take that opportunity to clear out their positions. People who bought the lows are going to take profit. Maybe some people will take a risk and short, so on and so forth, right? So sellers step in. The market corrects itself. And really the bull flag, so this is like a retracement consolidation pattern. We only know when the bull flag will be confirmed if it breaks this descending line here. If we pop, especially if we break it on strength. So if we pop with a nice big green candle, smash that bull flag, then we know we have confirmation that yes, indeed, this was a bull flag. Obviously, if it bleeds out any lower than the 0.618 retracement, then it's a shredded bull flag that got torched in a war, right? A tattered flag pattern. And then we're back to square one. If that happens, then it kind of just creeps down maybe to the 8K level. And at that point, you might as well just flip a coin. It's not necessarily a continuation pattern. It's more like Jedi mind tricks, probably from Spoofy to Bearwell, messing with people's heads, right? So, but until that point, in my opinion, we've had some questions in the room on bull flags. There's different opinions as to like the different time frames and the max amount of weeks or days that time can pass for a flag to be valid and so on and so forth. And the first thing I want to say is that technical analysis is not a hard science, right? Like a lot of this stuff is subjective opinions based on traders who've observed the markets, right? And we build off of the opinions of the OG traders who kind of invented this stuff, in the early stock markets, so on and so forth, or like the doji patterns of the candles and stuff, Japanese rice traders, so on and so forth, right? So there's a history, and this history is constantly evolving. But so you have to not only look at the patterns and the information that's laid out before us, but you also have to build upon that information as individual traders based on your own experiences and observations, right? Crypto, Bitcoin in particular, in my opinion, is a pure market. It's going 24/7. It's got wide exchange distribution around the world. It doesn't have trading hours. None of that noise. It's just, and it's kind of like a free market. Anything goes, right? So, in my opinion, it's a pure market. You've got all the laws of the jungle there, all the chaos, all the greatness, right? You've got all the pleasure and pain and everything that goes with it. So, from what I've seen anyways, 0.618 retracement is about as deep as a bull flag can go, in my opinion, before it becomes invalidated. To me, that makes sense. 50% retracement is nice. 0.618 is kind of a sweet spot. It's like 1.618 is a golden ratio, right? So 0.618 is kind of like a reflection of that golden ratio as far as fractals are concerned. But if it were to creep down to 0.786, Well, that's almost a full retracement, right? Then it's almost like, well, I might as well just do 100% retracement. Obviously, it's not a bull flag continuation pattern if it just kind of, now it kind of looks like a bear channel. So that's, in my opinion, if it goes lower, it would be like bull flag turns into bear channel if it goes any deeper. And then obviously bear channels can bleed out even longer and so on and so forth, right? So nothing's etched in stone. You got to base on your own observations using the principles that we understand around the markets. But the markets are dynamic. So you have to be adaptive and fluid. Your strategy has to be adaptive and fluid with the market. You need a plan, but there has to be some adaptivity to that plan, right? So one thing I kind of find interesting, though, is when we look at fractals. So we showed how it retraced to the 0.618 zone over there. You could, theoretically, even though this kind of violates the traditional consolidation period of a bull flag, and this isn't like perfect or exact, right? But it's a similar principle that you had a really strong impulsive move off the lows. I mean, this market didn't have much chill. Even these consolidations, they were very shallow corrections. Like right off of here, 26%. I mean, that's, typically, like on the last Bitcoin bull trend, most of the big swing corrections. So this is, to me, these are like continuation corrections. Like they spike up very quickly and they consolidate and then it breaks out and it continues. But then there's like on the meta trend, on the bigger picture, the deeper corrections of the last bull cycle in Bitcoin, you typically get anywhere from like 35 to 42%. Now, this correction has been a lot deeper. It really kind of pushed the max, right? And we can't necessarily expect the market to behave exactly the same way. There might be similarities, but there's gonna be some differences. There's gonna be some new ways in which it behaves, right? But what I find interesting is on the small bull flag, you have a retracement to 0.618, and on this larger one, you had a bounce right off of the 0.618, which happened to line up with support there, which also happened to line up with prior resistance in through this area. There are various different resistance points. They're making lower highs, but this happened to be a resistance point. And after that, before the breakdown, we couldn't even crack up above that, right? This one happened to retrace down to a resistance point right here and a resistance point in through here, which was the resistance prior to the breakout. So if we were to pop above this level, we would technically be breaking out of two bull flags. We'd be breaking out of a bull flag on the smaller time frame and one on the larger time frame, in my opinion. Be like a fractal within a fractal, right? And then 10K becomes that line in the sand where, in my opinion, if we were to just snap up above 10K, break these two flags, this is where we either start to challenge, retest this resistance up here, and then maybe pull back and do some more consolidation, and then perhaps we break that, and I think we're actually going into testing the all-time highs, right? That's my current hypothesis. I'm a bull right now, right? It's not necessarily always easy, and obviously I could be wrong. So, the downside is it just kind of bleeds out in a slow grind, and then we end up in square zero and whatever, right? We end up having to kind of hit the reset button and play this game all over again. And then you just got to adapt to it, right? And obviously, in my opinion, that's not the most ideal situation for Bitcoin and crypto. But, it's not the end of the world or throwing the towel. One has to kind of continue on with the game, try to adapt to it, and perhaps go off of like midterm swings to profit off of longer term drawdowns on longer term investment or position trades, right? However, even though there's a possibility of being bearish, of the markets being bear, I gotta say, some alts have been making some pretty good gains, right? Still making some profit. So I just gotta, like, as a trend rider and someone who loves to buy, who leans towards buying dips, who leans towards buying lows, who leans towards buying an accumulation, who tries to get things as cheap as possible. It's not always easy. You're not always going to nail the bottom. Sometimes when you nail the bottom, you feel like a rock star. Other times you average down, and other times you're kind of swimming in your own blood bag, holding some stuff, right? Those are the options when you play that game. When you buy low, sell high, it's not always going to be sunshine and roses, right? Because you're buying the blood of the market, you're buying the fear of the market, the guts of the market, right? That's not a strategy for everyone. Some people prefer the breakout, momentum plays, confirmation, so on and so forth. And both of those strategies are equally profitable. Some people really like shorting, and they short a lot. I don't happen to short a lot just predominantly because it just takes on more risk for my lifestyle and such. It requires more tentativeness. You're using leverage, you're borrowing stuff to sell. You can lose your initial position. For me, spot trading, is kind of trading more carefree. It's a lot easier to manage ones. For me, anyway, it's a lot easier to manage the emotions. Enjoy living life. Trading crypto is not just about hustling all the time or grinding it all the time or whatever. It's also a lifestyle. You also have to. It's about freedom. Ultimately, the point. I mean, everyone's got different goals and so on and so forth, but ultimately, the point, in my opinion, is to obtain max liberty, max freedom, financial freedom, have a hedge from the system and whatever shackles that tries to impose, freedom of time, freedom of choice, movement, all that stuff, right? Crypto can do that. It can, right? But sometimes it takes a lot of pain, hustle, and grind in order to get to that point. It's not necessarily like, hey, I'm just going to buy some crypto today. And some people get lucky and that it really is that for them. Like, hey, I just bought some Bitcoin at $1 and forgot about it and checked my computer. And now, now I bought whatever, like now I'm retired. Some people, it is like that, right? Other people, they have to grind and hustle for a bit and take some hits and some bruises as a part of the learning process. And even like a lot of OGs, and some people will make fortunes and then lose fortunes as well, right? So it's one thing making the money, it's another thing keeping it, right? So we've talked about this all before. This is kind of like the philosophy behind it, right? So I digress. Bitcoin. It's I'm a bull right now, right? And I'm not one of those perma bulls. I'm not one of those people who was just always bullish. Right? A lot of people remember how bearish I was, when we cracked the 10K area, and even explored possibility of bearishness on each leg up. Right? On each leg up, I had to explore. You have to always reassess. No one knows exactly where it's going to go, right? All right, so remove the drawing tools. Now, here's something interesting. I just want to talk about market psychology a little bit. There was, and sometimes I'll just kind of make comments on Twitter or whatnot in fun, but I noticed there was someone who had about 400 followers. It caught my attention. He posted a chart and he basically, that whole market cycle chart, I'm sure everyone knows it, where you got complacency, euphoria, complacency, anger, despair, denial, all that stuff. I'm sure everyone's familiar with that. If not, just look at market cycle emotions or whatever, and you'll find a billion images on Google Images. And so this person took out all the candles and just drew lines and basically said, this right here, this bounce, what is complacency. That we're complacent, and this is just a dead cat, and the target was $1,000. Okay, so and you know the logical sense of that, and I get the logic behind that. The logic behind that is in a market cycle, prior all-time high resistance turns into support, and so you gotta explore that, blah 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 blah. Right? I get that. Why it caught my attention and why I'm speaking about that is because this person only had 400 followers, but got, last I checked, it was like 500 likes or something on that post with 400 followers. So that's really, really interesting. That thousand, like, isn't that cute? $1,000 BTC is extremely popular right now. People really want their $1,000 Bitcoins right now. I mean, this is a lot of, for complacency, this is a lot of enthusiasm for $1,000 BTC, right? And then that tells me like, oh, wow, that means that there's actually a lot of money sitting in the sidelines. There's probably people who actually sold their Bitcoin, panic sold their Bitcoin sitting in cash, waiting for new lows, or people who wanted to buy but never did buy at the lows, or people who just never got a chance to even see Bitcoin at $1,000. Now, I'll tell you, I understand where they're coming from, because when Bitcoin, like, you know, I came into Bitcoin, you know, I first heard about it on the first little $200, 260 bubble. I was just playing around with it, didn't really take it seriously. And then, you know, when it ramped up to 1,300, then it really caught my attention. And then, you know, like a lot of people kind of just FOMO'd into it. So I went through the whole cycle myself, right? And then got wrecked in 2014, got scammed a bunch of times and blah, 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 but just obsessed with it and took it as a learning experience. And then in 2015, when the price went down to, capitulated down to $166, it was chopping around between $200 and $300. I FOMO'd, right? I didn't have a lot of money back then, but I FOMO'd. Like, I quit everything and I was like, I'm going full-time crypto, and I know I don't have a lot of time to get these prices, but to me, this was like my euphoria. I was so excited that Bitcoin was back at those levels. And the reason why is because I'd missed out, right? I saw Bitcoin at those levels. I even saw Bitcoin prior. And that chart was also in log scale. Okay. Gotta love log scale. Huh? And you know, that's the thing, is that I was, you know, I was looking and researching Bitcoin even in 2012, right? I tried to download the bloody wallet and didn't understand why it was taking so long to sync. And I thought it was defective. The download was defective because I didn't understand it. So I deleted the wallet. And this was probably like when Bitcoin was at 2 digits, right? And then I saw it go nuts when it went to 260, and I was kicking myself like, oh man, what the hell? Why didn't I buy in at 2 digits? Like, what's wrong with me? You know, and then I spent a week researching how to figure it out. And it's very difficult at the time. Like, people think it's hard now. You know, people have it on a silver platter now. Back then, it was like, you know, you had to like send your passport information to Mt. Gox to try to buy, you know, just crazy stuff. It was very difficult. My first Bitcoin, I had to meet someone in a coffee shop, you know, OTC, and pay a 10% premium to buy Bitcoin. Right? That's how I had to buy it, give them cash. That was how I had to buy my first Bitcoin. And then I got scammed, and I basically FOMO'd on a Butterfly Labs, a fake Butterfly Labs site. So it was a scam of a scam. They changed one letter in the URL and made the site look identical. And I was trying to buy an ASIC miner. I would have lost my money anyways, even if I went to the real site. So that's the irony of it. And so my first serious Bitcoin transaction that wasn't just tinkering around with faucet sites or whatever was basically, you know, sending a few $1,000s to a scam and realizing that night that I'd got scammed. And to me, a few $1,000s at the time was actually a lot of money. So my first, I basically just kept getting kicked in the gut over and over again as my first experience. You sure you want to get to crypto? Welcome to crypto. Boom! Just kicked me right in the gut, right? And then after that, I FOMOed into the Litecoin ASIC miners, the first Litecoin ASIC miners, and got scammed another few $1,000s because I didn't learn my lesson. And guess what? I know other OGs who got scammed by those same things. Some got money lost on Butterfly Labs. Some tried to buy the Alpha Technology ASIC miners, first ASICs for Litecoin. I encountered BitLord on Twitter. I was hanging out with him. We got scammed on the same damn ASICs. We both lost thousands of dollars, right? And then I was like, okay, I got to build my own miners. So then I built some GPU miners, spent a bunch of money, and then everything went on a bear trend. And I was just burning $500 a month on electricity for a bunch of shit coins. And the only thing that kept any of its value, I mined a bunch of WorldCoin and stuff. It all dumped. I averaged down on Litecoin from the highs in 2014, $50, $30, $20, $10, $5. I can't believe it's not butter. And then it went to 80 cents, and I wasn't a Litecoin fan anymore. Right? So I've been there, folks, right? If you've got kicked in the teeth a bunch of times and lost some money and got scammed, or averaged down some crap or whatever, I've been there. And unfortunately, unfortunately, that's kind of an initiation. We try to teach people, learn from our experience, and be super secure and try not to get hacked or scammed or whatever. Try to be diligent, risk management in the market, so on and so forth. But I got to tell you, I'm so glad I kept with it. It changed my life. And, it's still changing my life. I'm still having fun. It's still profitable. And the more energy you put into it, the more you hustle, the better you get at it. But hustling and putting a lot of energy, though, doesn't necessarily mean you're trading all the time, right? It doesn't necessarily, that's the irony. Is what I found is that position trading, holding positions for over the course of weeks to months, and then also if you get it at the right time, investing over the course of a few years of market cycle, in my opinion, is really what I found to be the most lucrative with the least amount of time. But there's a lot of effort that's also going to research and so on and so forth, right? So just kind of went off on a tangent there, but that's crypto. That's a lot of people who come into it new end up going through something very, very similar, right? And the thing is like Nate's saying, I have to say it's 2008. I wish I found this group in December 2017. And here's the thing with 2017 is we had a huge flood. Probably December 2017 was our biggest month for new participants coming into the space. And, even though we entertain both sides of the market and so on and so forth, always got to look at both sides. A lot of people will remember that in December of 17, I was very bearish and I was sitting in cash waiting for a long time. But that is like the least sexiest trading approach ever. Right? So when people come in, they're excited. Things are popping off. Holy crap. Litecoin's at $300 and Ethereum's at $1,400. Everybody's buying Lambos. You get a Lambo. I get a Lambo. Lambos for everyone, right? Everyone's like super excited. Crazy party. Everyone's just partying. It's like a 3-day rave marathon, right? You're just pure euphoria. And I'm like, and then they come in and they join the group. Like, hey man, what's going on? They're partying. Hey, what are you doing tonight? Blah, blah, blah. You enjoying the party? Blah, blah. I'm like the sober guy, just kind of sitting in the corner by myself. Like, yeah, I'm just kind of sitting in cash, right? And people don't want to hear that. That's not exciting. Oh, I want to buy some stuff. What kind of crypto? It's not exciting. That's boring. Right, sitting in cash, sitting in fiat, waiting for the end of the world, waiting for the crash, waiting for the party to end and everyone to be sprawled out on the floor hungover so I could go in and clean up the mess, right? But here's the thing. The most exciting, option is not necessarily the most profitable option. It's not necessarily the wisest option. Most of the time, when you're making profit in crypto, the majority of time, most of the time you're just waiting. You're just being patient and you're waiting and you're trying not to get too emotional about stuff and you're just waiting. And people come in and they feel like doing more is going to produce more fruit because it's counterintuitive to think that waiting could produce more fruit, that waiting could be more profitable, that you could literally take 1 or 2 trades a year and make your entire annual salary in a couple of trades and be good for the year and then do whatever the rest of the year, right? Like that, it's counterproductive, right? But you're just going for like trying to go for the higher probability setups, right? So for example, you take a panther. Panther is hunting, sees its prey, or any cat for that matter. It stalks its prey. In that hunting process, if you break it down into percentage, let's say it lasts all about 5 minutes. Out of that 5 minutes, or a minute, or how long it takes, what percentage of time is spent stalking and waiting? Probably 80 to 90% of the time is stalking and waiting, and 10% is execution. Execution is when it finally sprints into action and jumps on its prey and kills it, right? Even if that much, maybe it's 5%, maybe it's 95% stalking and waiting, right? But that's how it eats. Its end goal is it's got to get food in its stomach and needs to eat. That's how cats efficiently hunt. So you have to think of yourself like some kind of jungle cat in the markets. You're waiting, you're stalking and waiting, you're stalking the price action. And then when you're stalking the price action, you have that laser focus, right? You have this laser focus where you cut out all distractions. So people could be making a lot of noise around you, but you don't hear them because you're hyper focused on that target, right? You'll still be aware of things happening around you, of course, but you're hyper-focused on that goal. So you'll notice I don't necessarily take a lot of trades a year. I'm not one of these traders who's like putting out trade signals every day. And like some people, they feel like, that's what they want. They want a signal every day or whatever. If someone day trades or swings over the course of a few days or whatever, and they're profitable and they've got a really, really good strategy, I tip my hat to you. If you're interested in day trading, then honestly, do algorithmic trading. If you really want to day trade, if you know how to code, build an algorithm or work with a developer to build an algorithm with you, because the people who are actually doing the best at the quote unquote day trading has got a bot doing it for them. And, it's scalping. It's usually scalping, right? It's scalping all this crap. You wonder why Bitcoin has all these periods of consolidation. So if you're tired of waiting, you can get bots to literally scalp, a few percent off of the market. You could even get even tighter. You could just cut right into the middle and just scalp tiny percentages with leverage or whatever. You could do market making. There are, BitMEX and stuff will pay you to market make. Most of the futures exchanges will pay you fees to market make the books. As long as the thing is, though, is that to do an algorithmic trading, you have to have risk management as well. If the market's crap the bed, then your bot might get destroyed. A whole month's worth of profits could get wiped out in one trade, right? So I'm not an expert in algorithmic trading, but I know that there's a ton of algorithms in the market in this chop. So if you're looking for like productivity on a daily basis and even a form of passive income, if you create the right bot, and I'm sure there's some people in our group right now who even run algos to scalp the smaller time frames, then that's a viable strategy. But before that, if I was actually scalping and day trading, I only did it on the big moves. So for example, in a move like this, big impulsive move, it'd be like you'd be shorting, and then a dump, you'd be buying the dip, and then it popped, you'd be kind of shorting. So like you're kind of like on call, and all the action would happen in a period of a few days, and then after that, you'd just be waiting for weeks or months until whatever. Bill's saying, my best, 5 hours of action, 3 years of waiting. Yeah, pretty much. So that's a fairly low percentage, right? So position trading, right? And obviously, like even as position traders, you're still going to take some drawdowns. You're still going to take some hits. You might get stopped out. It's not like even if you go for what feels like a good setup, it's not to say that you won't get hit, right? We all, like I say many times, if you don't want to get punched in the face, don't take up professional MMA fighting. Don't be a boxer if you can't take a punch in the face. If you don't like having a broken nose from time to time, black eye, then boxing is not for you, right? Same thing goes with trading. If you can't take a hit or whatever, if that causes you, and initially, here's the thing. Initially, if you're like a pro fighter and you take a hit, it's a big deal. You're all sore, you might be crying about it, whatever. Same with trading. It's a big deal at first, right? I remember when I first started trading and I take a hit, I'd get really angry, be so pissed off. And but the thing is like, you got to roll with the punches. With experience and time, you just kind of shrug it off. And it's like honestly now, it really like, I mean, it might be hard for some folks to imagine, and I'm really telling the truth when I say this, but I hardly feel any emotion at all these days. I mean, I do still get a bit excited when bullish news pops off on my biggest investments like Tezos or whatever. I still find that exciting. But, I'll get really excited if I actually hit some of my higher price targets. This is still like the pot starting to boil. It hasn't come to a full boil yet, right? So, but, taking a hit, I could take hits. They can be, big position, big amounts. And, can things get stressful sometimes? Sure, things could get a little bit stressful, sure. But it just doesn't really faze me as much as it used to, right? Anyways, all that to say, Bitcoin, blah, 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 right? So just to give you an example, position trading, you want to talk about you want to talk about a time where the heat was really on, stress? How about when I was like averaging down on Bitcoin on the break of 6K, right? So I'll tell you, like, I'll just, I could talk about my wins and all that stuff, right? And a lot of people were here in the trenches with me. So people know I caught this bounce play. People know I sold some Doge and some Stellar for ridiculous gains up in this alt season right here. People who are around know that I averaged down from 8K down to 6 on this dip and then sold up on the bounce, that I bought in through here and sold up on this bounce. And then, so this was like I said many times, the majority of my profit as a position trader for 2018 was made in the first 2 quarters of the year, right? Then I started to tilt a bit. So even if you're good at trading, in 2017, I was just freaking banging them out of the park, left, right, and center, right? It's like, shooting fish in a barrel type of thing. Then I start to tilt. I mean, everyone's going to take some hits in a bear trend, right? Then I start to tilt here. I bought the dip here. It was good. It didn't hit my higher targets, and I got stubborn. I got a little too complacent, and I didn't sell. So got some drawdowns on some altcoins. Bought some more stuff here and some BTC when it had a fake out on Bitfinex. And then my plan was, here's the thing, my plan was to cut at 6K on the breakdown of the descending triangle, and I got complacent. Sometimes you can get a little too patient. You get used to waiting and patience and whatever, and sometimes you need to just cut. right? And not wait for the bounce. And here's the thing: I was trying to get too cute, waiting for a bounce, right? Waiting for a bounce, and then it crapped the bed, capitulated. So anything I bought in through here, and listen, this wasn't like I wasn't all in, right? People know that I was still being conservative on position size, that I was about 20% of my capital, and people know that I pulled out, enough hard profit out of the markets all throughout 2017, not even just in the highs, but in the alt season here. Every time I made big profit, I'd pull out hard profit. That it takes a lot of the edge off, right? So you can take some hits and tilt a little bit or whatever, and still be good, right? If you've taken enough hard profit out to be good for years, then at that point it's just gravy, right? It's just you're doing it kind of for fun, really. You're doing it because that's what you do, right? So I tilted a bit, and I was in about 20%. You could go back, you could see I was in about 20% of my trading capital here, and then so we're getting, I'm averaging down on Bitcoin on 5K, and then it keeps dumping. I'm waiting for a V bottom, right? Thinking we're going to retest up to 6K, and I can do some cleanup, some bag cleanup. The profit I made averaging down here, I lock in some profit. Then all that fiat, we come down here, and then I load it all back in at the lows, and then we sing Kumbaya off into the sunset. That was my game plan, right? That was my non-linear plan in that market to deal with that situation and manage risk. Well, the market didn't quite go according to plan. I started averaging down from 5K on Bitcoin. I started averaging down heavy on Tezos. Started in on in a position on Tezos above $1 as it hit the exchange because I was excited about the project. Snap below $1, started averaging all the way down into the 40 cents region type of thing. Bought some more as it was in sideways accumulation, kind of went in heavy. Then on top of averaging down from 5K down into the gutter, guess what happened? Is Quadriga, one of the exchanges that I had some fiat ammo on because I spread it out amongst multiple exchanges. They got hacked. They didn't get hacked. The guy died and friggin' disappeared. Right? So I took another big hit on top of some drawdowns. Right? So this obviously produces some stress, right? When you've got like 6-figure drawdowns on some stuff, you're definitely feeling the heat, right? Even if you're a seasoned trader or whatever, and you made good money and blah blah blah, you're feeling the heat, right? So what do you do at that point? What do? I detached, right? Like you can't tilt, you can't like start being scared or depressed or letting it affect the quality of your life. You got to detach. You got to disconnect. Go on a vacation. You know what I did? I went on vacation. I hung out on the beach. It's like, whatever. Market's going to do what the market does. I believe in my thesis. Whatever. And obviously there's a risk. There's no guarantee I knew anything was gonna happen. And then what happens? Boom. Right? Oh, not only that, I mean, on top of all of that, people I was very vocal on Twitter about averaging down from 5K. I had other big influencer accounts and stuff kind of inadvertently, no one really directly trolls me, but like inadvertently trolling, like, oh, only idiots average down, haha, fools average down, like preaching the good gospel of risk management that late in the game, and how you're an idiot if you average down on a capitulation, and they're being super bearish and stuff. Well, guess what, folks? Guess what they were doing up in the highs, right? They were doing backflips and celebrating and singing Kumbaya, and I'm putting in the majority of my risk, being conservative, basically going all in on what I had left on my trading accounts and at the lows, right? Buy low, sell high, right? You guys stick with the thesis, right? I'm not saying that's the most sane thing to do. I was a bit of a cowboy in doing it. I did kind of run out into the flames and fire. It's probably not the most conservative or sane risk management approach, right? But hey, I've been making some good money off of that. So what can I say? So, but that's the thing. To me, in my mind, I was like, if we capitulate, we break down, and we're like in another capitulation similar to 2015 style capitulation. I'm slamming my foot on the gas, and I'm and take the wheel, right? Like I'm going hard, I'm going heavy, right? So that was like strike time. That was going full throttle strike time, right? And then what happens? Then I'm like riding, take a little profit in through here, take a little profit in through 13K. Oh, boom, solid, right? So pretty good. And then it all washes out. The main thing that I'm down on right now, the biggest thing that I'm down on at this point is Zcash, right? I've got some drawdowns on Zcash. Oh, and I turned some lemons into lemonade. So I had some drawdowns here. So what I do with those drawdowns? On some shit coins, I'll call them shit coins because there's just some random shit coins in through here, right? They did bounce. I usually do get in nice through the lows, and they did bounce, but I tax harvested. I sold all those shit coins, helped offset some of the gains. I still had to pay tax. So even through all of this, because of what I made in the first 2 quarters of that year, I still had a big tax bill. So I helped reduce that tax bill by taking some of those shit coins, and then I took them and I put most of them into Tezos, and then I added to Tezos with the fiat off the exchanges and blah 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 blah, right? So on and so forth. So I knew everything was correlated. So if I tax harvested, sold a bunch of garbage altcoins, some crap that I don't really want to hold, and put into something that I actually really do want to hold, that I really like. The benefit is I'm reducing my tax bill, and because it's all correlated, if I'll start bouncing, I'm going to recapture everything I lost anyways based on the bounce of the other stuff I put it in. So that's how you turn lemons into lemonade. And I was talking about that. I was talking about that in updates and trailers, blah, 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 right? So every now and again, I like to do like a big 360 recap. But the reason why I'm explaining all of this in this process is just so you can kind of like, you see that even if you've been proficient, even if you've been consistently profitable trading, you're still gonna get some tilt. You're still gonna have some hot situations, some stressful situations, right? And then you got to adapt. How are you gonna are you just gonna lie down and die, or are you gonna get up on your feet? Or are you gonna find a way to adapt and survive, right? You never stop fighting, right? That's the one thing I learned about 2014. That's the biggest lesson. I just kept getting up. I kept getting up. A stubborn, right? Fine line between stubborn and stupid. But if you have a strategy behind it, there's a difference between just like being stupidly stubborn and doing things that hurt you, but being intelligently stubborn where you're trying to pivot and figure out a strategy to turn lemons into lemonade to make it work for you, right? Okay, long-winded stuff, but every now and again it's kind of worth going into those lessons and just kind of a recap. All right, so all that to say, let's go into some altcoins. Bill's saying, we got a few videos here, okay. Nate's saying, irony is I watched Chris's video December 17th about the bubble, but still FOMO'd in, didn't know how legit he was and about the group. Bill A saying, running up to 20K is definitely tilting, not prepared emotionally intellectually for such high prices. Sat my hands and wrote out my holdings and stuck to my goals of holding my longer term holdings at least until 2020. Once bull was confirmed, cut my crap coins for tax harvesting, then put it back into XTZ, ZEEK, and LTC at the bottom, January 2019, and here I am. And we've had some really, really nice bounces on stuff. I think Litecoin was at $30 or something. Anyways, won't go into Litecoin, but yeah, that had a nice bounce. We've had some nice doubles, triples, and we forget. Here's the thing: we forget. Oh, I wanted to get into this. Sorry, I digress. I was talking about how cute it was that a lot of people wanted to buy Bitcoin at $1,000, then I digress and say, hey, I understand, because when we were at $200 or $300, I was really excited. It's like some people were really wrecked, but I was really excited. And the fact that it lasted 10 months or whatever, 11 months or whatever it was, I think it was 10 months. It was like a gift. It's like, I can't believe it's down this low for so long. Like, it's actually giving me time to trade and work and hustle and get some of these cheap coins. And every coin that I managed to save from that year did 100x multiple, right? Insane compounding. All that to say, so I understand where people are coming from. And listen, nothing is improbable. If we go down to $1,000, I'm going to eat my hat, and I will bow down to that person, and I'll personally crown them on Twitter as the king of Twitter or whatever, right? Like, I'll say, you know what? I guess I was a perma bull, and I didn't see it coming, and I was an idiot. And that's the thing. That's a part of the learning process. Is you still have to, like, if you've made a dumb call or you've done some dumb trades, to own it, to not try to hide it, right? So I will definitely tip my hat. I don't see it. I don't see it happening. I'll definitely tip my hat. I'll give you the reasons why I don't necessarily see it happening per se. There's still a probability. I don't think it's a high probability. Obviously, there's still a probability. I can't be so arrogant to think that there's no probability of that happening. Anything could happen in this jungle. But it's wildly, wildly popular for someone who had 500 followers. I made a commentary on it with over 100,000 followers, and I probably got about 200 likes. That kind of shows you that, where the market's at as far as the balance is concerned, right? Now, what happens is, if there's a lot of people bearish right now on Bitcoin, sitting in cash, then if we are still in a technical bull trend, which I believe we are, what happens is, if Bitcoin does break the all-time highs, who knows? Maybe it's next year, maybe it's 2020, maybe it never does. Maybe that's the end of it. We don't know. That's the thing. You're always on the bleeding edge of the unknown. You have to be comfortable with not knowing, even if you have a hypothesis. What ends up happening is, how this market cycle gets fueled is, the instant Bitcoin breaks the all-time highs, anybody who was bearish at any point from here to here in this cycle, who had money sitting on the sidelines waiting for 100K, they suddenly realized that this wasn't complacency at all. They suddenly realized this was disbelief. This was skepticism. And they realized they were wrong when it breaks out at 20K. And then they say, oh crap, I didn't buy back in. I didn't buy the Bitcoin I wanted to buy. I missed out. That's a whole fear of missing out. It creates pain to miss out. And then what ends up happening? Well, they look at Bitcoin and they say, I missed out on Bitcoin. It's too late. It's $20,000. Maybe some of them can't afford a full Bitcoin at that point. Then what do? They look at altcoins. That's when you get into that 2017 style parabolic altcoins making ridiculous gains. It is when, the same thing happened in the last cycle, folks. I saw people being bearish all throughout the year. And listen, we always in this group, we're never like one-sided. We're not always perma bulls or perma bears. There are some times when we're a little bit more bullish or bearish than other times, or a lot more bullish or bearish. But I still got to count that maybe, hey, I might be an 80% bull, but am I ever 100% bull? You always got to entertain it. There was a lot of heat, a lot of drama in through here. There was a block size debate, the wars, the hacks, the this, the that. There's a lot of stuff, right? China bans, China banning exchanges, blah, 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 blah. But here's the thing. When we broke out right here, alt season just started going nuts. Altcoins were going crazy, and they didn't stop. And people kept selling too early, and they kept going up higher and higher and higher. And it just went on for months of just pumping and pumping and pumping. And there'd be huge shakeouts. And then the shakeouts would bounce and break out and go higher. And it it was like insanity. It was like you're like running a marathon, a shitcoin marathon, and you're exhausted. You want to just take a pause from the madness and catch your breath and drink some water. It was getting so crazy, right? Just like when Bitcoin was going parabolic, from 6K, it just kept going up higher and higher and higher. And you're like, what? This is madness. When's this going to crash, right? Like hell, this is madness, right? You know it's going to crash. You just takes its time, right? So anyways, so they see all these cheap alts. They might not be so cheap then. They'll be probably a lot more expensive, but cheaper compared to 20K. And that's when you get the alt season and they start really pumping. That's my hypothesis. There's another reason why I think this person's hypothesis is wrong. Not the fact that 1K seems like a crowded area to buy, but in his comment section, he basically said that, the Bitcoin halving is already priced in. A lot of people know that I think fair market hypothesis is a heaping, flaming pile of dog crap in a paper bag. The Bitcoin halving is not priced. I was having debates with people on Reddit on Bitcoin markets in 2015. Armchair economists telling me it's all priced in. There were people talking about the Bitcoin halving being priced in at 2012. I retweeted a couple of excerpts that someone found for that, if you want to go see them. One person's like, in 2012, he's like, I'll fade any rally, any Bitcoin rally, anytime or whatever. what was Bitcoin, like $12 or something like that? Oh yeah, we got to fade this rally. It's priced in, folks. Okay. We already know that how ridiculous that was. But if you look at the accounts talking about it being priced in, a lot of them are from 2018, 2019, or whatever. They're like new kids on the block, right? So hey, if anyone's new, it's not a job. Everyone's got to start when they start. The difference is that some people might just join yesterday and think they know it all, and then other people, they empty their cup and they realize that there's a lot to learn through experience, right? Anyways, so priced in, I think that's funny. It's not priced in, personally. Okay, let's go into altcoins. All right, we have one question regarding alts. What's your take on Decree as a longer-term investment, a high-quality project? Reminding Tezos in many ways, had one cycle array, but recently started moving quite strongly on both the USD and BTC charts, and still with high potential considering its fundamentals. I like Decree. I've always liked Decree. Decree is one of those projects where I was eyeballing it at $1, wanting to get in at as an early adopter at $1, and I didn't. For whatever reason, I didn't. And then it just pumped and went nuts, and I just let it go. I was like, you know what? I missed it. So be it. I'll look for opportunity elsewhere, the next project. And that was it. And so I never really traded it that much or really invested it, even though I think it's a solid project. That was pretty much the reason for it. We can look into Decree right now. Let's see, in the BTC chart, it's obviously made a nice, this is a nice sharp V bottom bounce. Nice and solid, almost popped a double. It's obviously on the lower end of the spectrum. You kind of see a nice little bear channel that it broke out of with the V bottom at the bottom of the channel. Then maybe it, chops around higher, low, so on and so forth. USD price. Let's see who's got the best live. Oh, look at this. Okay, so this is called the Frankenstein pattern, where you got the big box head over here at the bolt sticking out of the neck. All right, that chart's kind of a liquid. This one's somewhat a liquid too, but a little bit more priced at there you go, VTRX, thank you. $21, down to the $10 level. It's not terrible. It's only a 10x multiple off the high. I mean, this is something that went up to what, $130 or whatever. So what's interesting about this is this is kind of like a bit of a stop raid right there. It broke down right below support. Some people might have cut on the snap of support. There's like max pain, but like a nice little V bottom there. So let's see the percentage. And this was mid-October. This is up about a double, so it's not doing too bad. I think this is a solid project myself. I think it's at a reasonable price. I would probably maybe wait for a dip on it if you get a dip. But I don't think this is a terribly unreasonable price. It's not like buying some pumped up table scraps up in the highs up there. You know, when it was high and it was just pumping and pumping, I was like, I can't. You know, I could play hot potato with this, but I can't touch that with the 10-foot pole just because of that. And, you know, so this could kind of maybe chop around. It's an accumulation pattern. Nice V bottom. It kind of looks like it's bottoming out to me, as a lot of coins did. It made a nice little ramp up and then sold off, even from this ramp up at the beginning of the year. Had a big sell-off. Not bad, you know, 70% sell-off. And then at the beginning of the year went up, you know, close to 200%. I think it's in a reasonable zone. Seems like it's about halfway between those. If I were to do a retracement, it's about almost 50% retrace up. So if I was interested in accumulating this, I'd position size, right? That's the beautiful thing with position sizing. I'd be like, first thing I'd do is identify exactly, what kind of trade is this? Is this a longer term investment? Do I want to hold this for a few years? Is this a position trade that I'm going to hold for like a few weeks, a few months, half year, whatever? Is it a little bit of both? Is it a day trade? You know, probably not for me. Or is it a short-term swing trade? So let's say it was like either a position trade or an investment. I'd say, okay, so that's number one. Identify what is it. You know, obviously even for tax reasons, all that stuff. Identify what it is. Number two, how much of my capital do I want to allocate to this project? Where does it weigh on the scale compared to other coins for me? Right? Is it a solid project? Do I want it to be a larger position size? So you identify exactly how much you want to put into it, and then you can start allocating. You're like, okay, well, it's up there. I don't know if it's going to go higher or dip. Maybe I'll just take a bite out of it right here, you know, in this mid-range. Maybe I'll just like, out of that position, I'll buy like 10%, and then it goes lower, and then you could buy like another 20%, and it chops around and you just add to it, or it craps and capitulates really deep, and then you go super heavy and then sell on the bounce to offset the drawdowns from this. You know, like there's a lot of different ways to kind of cut the cake. Like let's say I bought like 10% here and 20% there, and then like it just snapped down to $1, and I go like 80% down here. And then all of a sudden, from $1, like this just really crap the bed, and then it bounces up there, retest. Then all of a sudden, this is like, well, I don't know. Okay, wait a minute. It's a little bit off. Then it's like a 10x or something crazy. Well, then suddenly, like if 80% of my position just made 10x, then the other 30% that had a massive drawdown doesn't feel like anything, right? It's a paper cut at that point. So a lot of different ways to kind of play that. Or that's like the worst case scenario. So you got to identify what's the worst case scenario. Worst case scenario is support snaps and it completely craps. Well, there's two ways that you could deal with that. You could either cut it and be like, you know what, I'm just going to take my losses. So let's say your average is in between these two, and it craps support. then you take a 25% loss on a partial size position. That's one way to cut it. Or maybe it was a full size position. That's one way to cut it to manage risk. But the risk of that is, you know, you might think it, and sometimes you do that and it's perfect. Sometimes you're like, hey, I'm going to buy here. It looks like accumulation. It craps. You cut out. You're like, yeah, I took a 25% hit, but hey, that's a lot better than a, you know, 65% hit. And then you feel like a genius after. And then other times you cut it right here and that was the low. And then you feel like a plebe for selling the low. But here's the thing, you sell the low and then it pops up back here. There's nothing saying you can't get back into it. It's not like, oh, this is the end of it. You sold your Tezos. You fail at the, not Tezos, sorry, Decree. You fail at the trading game. You may not, you are forbidden. You are banned from ever touching Decree ever again. And that's the end of it, right? So like you just buy back in like, oh, oops, you know, I got stopped out. And you buy, you know, so there's a lot of different ways to do that, or you do partial position, you average down, or you buy some in through the accumulation mid-range, and then you see a nice solid breakout, let's say, of like resistance in through here, and then you add on the breakout when there's momentum. There's a lot of different ways. People have to kind of do what's right for them. Saying, considering flipping part of my Zeek position to Decree, which recently implemented privacy. And that's another thing. One could say, hey, I took a big drawdown on something else. Maybe I do some tax harvesting, flip it into Decree. Maybe I'll come back. I like Zeek, but I'll come back and, you know, buy it back later or whatever. There's a lot of different ways to do that. So I personally think Decree is a pretty good project. You know, definitely gets a thumbs up in my book compared to some other projects. So my thoughts on Decree. I'm going to look at Atom, and I'm going to save the best for last, or my best for last, which is Tezos and the Tezos, recent Tezos news that we keep getting hit with. But I'm going to, we're going to look at Atom because that was fun. So, obviously, some people were along for the journey. I posted a video on YouTube, so I'm starting to create some more content for the public. I'm not going to give away all the secrets, though. But, you know, I'll definitely do some reviews, and maybe I'll have commentary on news and stuff like that. So I didn't know I was buying, like, almost bought the bottom at the time. Really, like, the chart was ugly, you know, couple lines, it was red, you know, went lower than where I bought at the time, 10% lower. I was like, oh, that's great. Oh, well, it didn't crack support. Let's see what happens. And then I was just being patient. I was like, yeah, this isn't exciting until it does something. I want to at least try to get a double. And so I was waiting. I was like, okay, I'm going to be conservative. You know, not taking a ton of trades, so I'm going to lock in. You know, and that was this is compounding profits, folks. You know, this is like money that I sold Bitcoin at 13K with, buying down here on some of that money. And so that's just kind of like compounding, right? And then I sold in through around 430. Pretty much almost sold the local top. It's like I almost bought the local bottom and I almost sold the local top. So pretty, like, not bad. That was a good trade, all things considering. I'm very pleased. So I still got 50% of my position. Right now, it's a free lunch. What triggered me to sell? Well, a few things. Number one, I wanted to kind of sell half my position on a double to take my risk capital. That was number one. Number two, we were getting close to there. I saw we are almost at a 50% retracement zone. And I didn't quite want to wait to the 50% zone on the mark. And the reason for that is sometimes when you try to sell an exact retracement zone or an exact resistance or whatever, it could get really crowded. Like there might be some whales who are looking at the same area and whatever. So it's like, it's kind of trying to get in before that happens. Like, you know, So I won't necessarily try to sell like the exact top, and sometimes in doing that, it might actually be the top. And I'm not even saying this is a top. Like this could just bounce and zigzag back up, and that's why I have 50% of my position. Now it's a free lunch, and so I want to take my risk capital out, and then I could compound that more. I could buy back in on some Tezos now. Tezos, sorry. Obviously, I've got Tezos on the brain. Huh? Keep Freudian slip. I keep saying Tezos. Every chart looks like Tezos to me right now. Sorry, unhealthy obsession with that market, with that coin. All right. The logical. So I was thinking about this. The logical buyback area would be the prior, like the breakout point here, throwback prior resistance turn support on this ascending triangle, and that would be. Let's see. That would be, maybe like 19% cheaper. So I could buy back that same stash 19% cheaper. But I'm greedy, so I put my orders like closer to this line here, just in case it goes in a bit deeper. So at this point, I'm kind of like, because there's some resistance in through here as well. And it would be a little bit deeper, and I'd be able to buy even more if it went down that low. So let's say it came down here, that would be, 26%. And so I've got some orders there. So right now it's like, if it comes down to here, I'll rebuy what I sold. If it chops around and just goes sideways and does nothing, I'll just hold my position. And if it starts rallying and it bounces and it keeps going, I'm probably going to wait to see if it's going to break all-time highs before selling some more, depending on the size of the candles. See, all these candles are fairly healthy. They're all evenly spaced. I want to see candles like this to sell into, like these monster candles right here. So when trend riding, you could preemptively sell like what I did right there and just have a place like, okay, this is what I want to do, take my risk capital, preemptively sell. Or you sell into these, you wait for monster candles to appear and you sell into strength on the monster candles. Or you wait for the breakdown of the monster candles where you start to see wicks and the price is chopping around, breaking down, and then you sell into that. So there's different ways to even like sell and find targets. But at this point, because I'm just riding profit, and this is a brand new market and I'm not invested in it, I'm not going to pay $2 or whatever when people are paying 10 cents. It's 20x multiple. I mean, yeah, it was in 2017 and blah, blah, blah. It's just not my shtick, right? So I was like, okay, that's fine. Congrats, anyone who got in at 10 cents. Don't know if I'm going to be I won't be a long-term investor, but I'm like, hey, this is a great market to position trade in. I don't own any as an investment. I need some cool markets to actually actively trade in that I don't have any long-term bags to mess up this whole cost averaging, all this crap. So and Cosmos seems like a pretty solid project to me. So it's not just trading some random shitcoin. It's like a higher quality project that could actually produce higher percentage gains than some other projects. So at this point, let's see where this goes, right? And where I would cut the position is if we snap below this ascending line, and let's say it just like comes down here and then it kind of withers and then it just bleeds out and it looks like it's just gonna fizzle and maybe creep its way back down to the ICO price, then I'll just probably like sell the rest of the position on the breakdown here, which will just still be more profit. And then I'll wait. I'll be like, okay, when's the next entry? Maybe I wait months and it cracks below support and I get in lower. If it goes low enough, maybe I invest. It's a longer term position. So I just basically mapped out like multiple probabilities and I plan on all these probabilities. Like I'm playing 4D chess right now with this market. And that's the thing. I don't have to predict where the market's going to go. Who cares? I'm going to make money no matter what this market does right now. At this point, I took out my risk capital. That's the beautiful thing about doing that. Now, if you were in 2017 and you sold half on a double, you're pretty much kind of, you're cutting yourself short. Like if you sell half on a double and the market goes up 100x in a year, you're going to feel pretty salty about selling 50% of your position on the double. Who knows? Maybe I come back to this in 2020 and it does something crazy, and I'll come back and be like, wow, I thought I was so smart. I was a real wizard back then until it went up 100x or something. Whatever, right? That's the nature of the game. You don't know. But, I can kind of trade the swings anyway. So, all right. So that's Atom. Update on that. Now let's look at Tezos. Dun, 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 dun. Okay. Hello. So this is nice. This is cute. .38% retrace right on the nose. Bullish engulfing candle with a nice bottom wick to take out what? 3 day, are these days? 3 days worth of selling in one day. It's showing some strength. Obviously, there's some news behind that. New fund. Did it even start trading volume yet? I don't think this started trading yet. So, what's the news? The news, Swiss fund, 6 Swissx exchange. There's a new Tezos fund. They have Bitcoin and they have Ethereum, they have Bcash, they have a few other things, but now there's a new Tezos one. It's giving returns, and each one of these shares is equivalent to, I think it was like close to 16 XTZ, so it's still fairly close to market value. There's not a lot in the fund. I think there's just a little over $1 million. So I think they're just testing the waters with it. They're being smart. They're position sizing. They don't know what the taste or demand is for that for Tezos. So they're testing the waters. There's a little over $1 million. I'm sure if demand and volume increases and there's demand, then supply and demand. They're obviously in the business of producing these type of products to supply the market. If there's a high demand, then they're going to grow the fund. Logic would say they'll add more money to it and it'll be worth more than $1 million. So what's interesting about this though, and I actually right before doing this update, I called up my bank. They have an international trading desk for my investment account, just like old school, grab the old satellite phone, Wall Street style type of thing, and tried to place my order to buy some Tezos in my retirement and tax-free savings account to buy some. So I'm like, wow, if I could shelter a bunch of gains, that would be great. If I could supercharge these accounts with a market that I know, that would be great. Obviously at position size, it's not like I'd go all in or whatever on those accounts, but I'd get a good starter size going. Pop to 10x or something and be worth it, right? We'll see if this breaks out. But Tezos, and it's cool because Coinbase Custody are the ones who are holding these for secure keeping. So that's kind of cool. Congrats to them. And we'll this might open the floodgates for some more stuff, right? So here's the thing. Kind of, we have this descending line here. We've hit some resistance in through here. And this isn't perfect, but we've hit some resistance. If we can break out of this, I honestly think that we're going to break all-time highs. If we can snap that, right? That's a good question. How much XTZ does Coinbase have? I'm going to have to look into that. I haven't actually looked at it. I don't think it's a lot. They have a bunch on their exchange. I don't know if they've got a ton for in Coinbase Custody, but I'm going to have to check that out. Get back to you on that one. This is Coinbase. Let's see if they pull off their shenanigans. Obviously, like volume increased. Volume increased. Bet was starting to decline a little bit. Increased on that news. Up 11%, 36. So it was like a 20 mil this morning. It's popped 11%. You know, one thing I've also noticed about, actually, there's other things popping off too, so that's kind of cool. The thing I've noticed is that Tezos just tends to go in its own rhythm, and it really seems receptive to bullish news. It really reacts to bullish news. What's holding the volume back? Interesting question. I think maybe a few things. I think some other projects might have some wash trading bots to increase the volume is one thing. Number two, I think 80%, last I checked or saw, 80% of all XTZ were staking, right? They're baking. There's actually not a lot on the exchange. And if people are buying them, they're probably withdrawing them. So I don't know how much is being actively traded. Now that's going to change. That's starting to change because both Coinbase and OKCoin just came back, came into the mix, and they're giving staking to people on the exchange to encourage people to hold their coins on the exchange. And if you look at the pairings, OKCoin is now a player in the game, right? And Kraken, the CEO of Kraken, Jesse, had confirmed on Twitter that Kraken is going to start paying stake and rewards. So that's going to also make it a very attractive market to trade as well, right? So that could attract the liquidity. Not just trade, but hodl. You know, you have to really make it worth your while to sell. So it's definitely a hodling coin. People are being encouraged, but the volume has come a long way. I mean, and a lot of this, we know that the Tezos Foundation and the folks behind there are not paying for wash trading volume and fake volume on all that stuff. And, a lot of these exchanges probably don't have any incentivized to just wash trade it versus like some other projects that might wash trade. But I remember, if you remember, like at the October, like a year ago, when it listed on Bitfinex, like the volume of Tezos at some points were, under 1 million, right? I've been watching this volume grow and exchange distribution grow over the course of the year. I'm not sure what Kraken will pay for baking. This is basically just Jesse responding to someone asked him on Twitter, and he's like, yeah, it's coming soon, pretty much. So that's about the only information. They haven't made any formal announcement or anything, but we've got some confirmation based on that. Wouldn't the amount staking increase demand, less supply? Yeah, but it doesn't necessarily, like what creates volume is the constant trading back and forth of coins, right? The constant like buying and selling on the exchange back and forth. You get these surges of demands. Like at one point, it went up to 90 million last week. We had a surge of demand. It would be, it would be interesting to do a chain analysis and to see what the outflow of Tezos was during those highs. That would be interesting from the exchanges, just to like, if there's a massive volume increase, like how much of those XCZ are being withdrawn versus how much are staying on the exchange and so on and so forth. Because that would be interesting because, anyways, I think it'll continue growing. But one thing that I said at the beginning of the year when it was just on Bitfinex, and a lot of people were complaining on Reddit about, it doesn't have exchange distribution, they need to pay for listings, they're really angry at the Tezos Foundation. And, I just kept saying, it's like, they're not going to have to pay for listings. If I'm correct in my hypothesis and this being a top quality project, it's just going to get listed on all these exchanges. They were going to be, not only they're going to list this coin, they're going to be more than happy to list it. And they're going to be excited to list it if it's the real deal. If it's not the real deal and it's just some shitcoin and I missed the mark, then no, it's not going to get listed anywhere. No one's going to get excited, and it would have to be forced. Like there's a lot of crappy ICO ERC20 token projects that are just forced, right? They have to get basically bribed people to list their coin. Like that's, in my opinion, that's like the definition of a real true shitcoin, right? When you basically just have to pay people to list it. That's how crappy it is. Right? So this is like, it's like Ethereum never paid for listings. Bitcoin never paid for listings. I don't really know about a lot of the other ones, if they did or not. Some of them have big war chests. I doubt Litecoin. I don't think Litecoin paid for a single listing. I doubt it. Not sure about Ripple and Bcash and EOS, and I don't know. I don't know if they have paid for them or not, but anyways, this isn't terrible. 37 mil is not terrible. I mean, for something with organic volume with no wash trading behind it, and also take into account a lot of these other markets have been around a lot longer. Now, Cosmos is kind of an exception. It's got more volume, and it's been around probably the same amount or less time. So, I wonder where most of this volume is coming from, though. Is it balanced? See, this is a little bit odd because it's showing crazy volume, but the majority of this volume, so not a majority, but a good chunk of it, it's basically coming from one exchange, Hotbit. Whereas, like, you look at somewhere like Binance, which is, in my opinion, probably a little bit more legit. It's like, moderate volume. OKCoinX, Tezos has more volume than OKCoin. What about Kraken? Ruby, Kraken. Kraken, the volume's fairly low. And is this on Coinbase? I'm not seeing this on Coinbase Pro. When you see like tons of volume on American exchanges, though, that's legit because they just can't get away with wash trading. Like if they get audited and the exchange is just creating all this fake volume, they're gonna get the mallet thrown at them. It's not gonna be pretty. Whereas like some of the dodgier international exchanges can get away with a lot more because they're in kind of regulatory gray zones. So let me just look if Tezos is trading on Hotbit. I don't know if it is. Are we trading on Hotbit? It's not trading on Hotbit. Maybe if it was trading on Hotbit, it would have another 30 million in volume. For whatever reason. I don't know if that's real or not. I don't know anything about Hotbit. But it's definitely, so that's, and then a lot of these other coins and markets have just been around a lot longer. They've had, like, Tezos market's pretty much just a little over a year old. So it's still kind of growing. A lot of these have been through a few years. And do I know of any DEX that's trading Tezos? Good question. None that I can think of, but that's worth looking into. Are you, Carl, I think you were saying that maybe you have troubles getting access to Tezos XTZ because of your location, jurisdiction? Blocked in New York only. So Tezos is blocked by New York residents. Is Gate.io a DEX? I don't Gregory completely blocked now. That's really unfortunate. And I guess a lot of these places require KYC and all that stuff. Now, interestingly enough, with this fund though, Kyle, technically you should be able to buy this through a regular. Now this is expensive though. Like they've got like 2.5% fee a year, and they take 25% of the baking rewards, and so on and so forth. However, once this goes live, oh yeah, I tried calling to buy some of this, and they couldn't find it. So I don't think it's trading yet. It just got announced, but I don't think it's trading yet. But you may be able to like even buy some of this through like even a retirement account. You know, like traditional accounts like an IRA account or RSP, stuff like that, or even just like a regular investment account through a bank or a broker. Sometimes if it's like an international exchange, you have to actually call in. Like I didn't have any option online to buy it. I had to call the trading desk at the bank, and they take like a pretty big fee. Like I think they wanted to quote me like a $250 fee or something like that just for the trade. But you know, if you do a bit of size, then I can make that $250 less of a percentage. So just make it kind of count a bit. Costing a hold some from a peer-to-peer trade, waiting to buy more. So that could be an option, interesting option. And obviously, in some accounts, like a retirement account, you basically defer taxes on it if it makes any significant gains. All right, so let's see if this can break out. This looks kind of good. Nice bullish engulfing candle. So we'll see if this gets any steam. The volume picks up again, but keeps getting hit. If we keep getting these 1-2 punches on this this news, it keeps getting hit with. It's obviously, you know, we're seeing what we're seeing in this is the industry really likes this proof of stake model, and it seems like a lot of serious investors and exchanges and stuff are really kind of choosing Tezos, and STOs and stuff are really kind of gunning for it, and it's still very much in its early days. Another thing that I think could be very, very interesting, and one thing to look for moving forward in 2020 is Ethereum is going to be going proof of stake in 2020. But the problem with Ethereum, I feel like Ethereum has a lot of baggage, right? I feel like Ethereum might be the MySpace of smart contracting blockchains, right? That's just my hypothesis. Maybe that's a biased hypothesis, but it went through all that ICO craze. A lot of them were scams. A lot of people got burned. A lot of hedge funds got burned buying garbage, right? So it's got a lot of that baggage behind it. It's got the baggage around the DAO hack. It's got the baggage around there's no real governance process. You know, like it was only 2017 Vitalik decides, hey, we're going proof of stake. Like Lord Vitalik said it, therefore it's going, you know, and that's fine. I actually have a lot of respect for the guy, and I think Ethereum, you know, is innovative, all that stuff. Experimentation, that's natural. There's going to be hiccups. There's going to be problems when you're experimenting. Whoever's breaking the ice first is going to have the most problems to deal with. It just seems like there's a lot of baggage, and it also kind of like, you know, just kind of seems immature a little bit, the experimentation and the silliness at the conferences and stuff like that. You know, dancing around with, you know, doing the unicorn dance and all that kind of stuff. So to me, it just seems like Tezos might be a more professional blockchain, doesn't have all that baggage. You could participate in governance. It's not trying to be proof of stake. It's already proof of stake. And if I had to actually make a bet, like if there was a futures contract that I could bet on this and short the launch, there's been so many glitches and debacles in Ethereum that it wouldn't surprise me that when they convert to proof of stake that another black swan will happen and some really crappy stuff will happen, some kind of bug or another drama or something. I've just, there was the parity bug, there was the DAO hack, there's just a lot of huge blunders, right? Like really kind of move fast, break things type of stuff. Anyways, it's not a critique. There's actually still a lot of symbiosis on the. I'm a speculator. It's easy for me as a speculator to sit here and critique developers, right? I'm not building anything by speculating, so I still have to respect them as developers and the builders in space and so on and so forth. There's still like synergy and symbiosis between Tezos developers and Ethereum developers and Zcash and so on and so forth. I think there's a lot of respect. If anyone's like really big into ETH and stuff, it's not any offense. It's just the stuff that I've kind of seen throughout the years, my own personal opinions. I think that it might be able to eat into a big part of the lion's share. I also think that the staking rewards of Ethereum might only be a little under 2%. Doesn't look quite as attractive. That might fluctuate though. Not everyone will be staking, so maybe that would increase. Just like Tezos is like 5.5%, but you could get 7 or 8 in reality because not everyone's interested in staking. The minimum for staking Ethereum, I think, is fairly low. I only think it's like 3 ETH or something like that. I don't know the exact amount, but I think it's fairly low. They've been playing with the amounts. At first, the idea was like 1,000, and then they just keep playing with the amounts, right? And that's the problem when you don't have a governance model. It's all arbitrary. It's willy-nilly. It's like whatever, like they wake up and feel like. One minute they feel like toast in the morning, the other time they feel like eating oatmeal in the morning. And that's just the way it's going to go, right? Whereas like at least with Tezos, there's a formal process. Someone's like, hey, does everyone want toast? Let's vote on it. If you want toast, then the protocol will amend itself and feed you all toast, type of thing, right? Silly example, but you know what I mean, right? There's at least a formal process, so the flexibility of the blockchain is kind of baked into it without having to sacrifice or compromise any values, any proposition value, right? It can be highly adaptable. And its only main proposition value is that it's highly adaptable. It didn't come out saying, hey, this is like Bitcoin. Bitcoin came out strong, hard money. We're hard money. There's only going to be 21 million of these every 4 years. We're going to keep reducing the block rewards. And if some developer came out one day and said, hey, does anybody want some toast? Let's change 21 million to 30 million. That's not going to fly, right? That you just can't do that. And also, its value proposition is on immutability. Transactions are mutable. So, if a major exchange gets hacked and $100 million gets hacked, or someone loses $100 million, the developers are going to play you the world's smallest violin and shed a tear. They'll be like, great, coin burn, less coins in supply, like, right? And so that's what it is. And it's really good at what it does for that thing. And it's very conservative in what it does, and it's very simple, and it doesn't try to be anything else. And it's not trying to be all things to all people, and that's it. And as a result, it's kind of succeeded because of that. Whereas Tezos didn't really have any of those hard things. Its only hard thing is, hey, we're highly adaptable, and our hard thing is community voting and experimenting with decentralized governance, smart contracts that self-verify themselves for extra security. That's it. They never came out and said we're an STO platform. Like they even changed the rules. I mean, this shit was 10,000 XTZ to bake, and they changed it to 8. And that was like a very benign thing. Now, if you would have changed the block emission rewards for Bitcoin and the halving rewards for Bitcoin, it would be it'd be all-out war if someone tried, not war, like literally, but, people, there'd be troll campaigns and hacks and developers would be fighting, and it'd be like the block size war, right? The block size war is like somewhere gray. It wasn't really hard. No one said there had to be a hard block size, so that was more a difference of opinion. But if there was a community voting mechanism on that, there might not have been such a war. There might not be like a billion different like fake Bitcoins right now, you know? Anyway, so so that makes Tezos very highly adaptable, in my opinion. It can adapt all the best features. If something messes up, it could change it. It's all based on the community. Anyways, we're gonna end at that. It's almost 2 hours. Another bit of a rant there on that, but let's see if we can break this line. Like I said, just to reiterate on my plan, I would really like to. I wouldn't mind, even though I'm bullish and I have really high price targets on some of my stuff. I wouldn't mind taking out most of my risk capital around $5, if at all possible, just to make it like right around here, just to make it like, hey, and let's say that we're, this candle size right here for this entire move up, or would that be probably not that high, but let's say that we're to break at the all-time highs, okay, maybe around there, wherever, somewhere the candles start getting bigger, maybe around $5 or so. I wouldn't mind taking out my initial risk capital to make it a complete free lunch, and then the rest, and I wouldn't have to sell that much to do that, because my cost basis is probably like similar to Chris's, maybe around the 70 cents area. So that would be a fairly good percentage gain. Take out all my cost basis. And then at that point, it's just gravy, really. Complete stress-free investment. Then I'd sell a little bit more at $10, $50, $100. And my goal is, if it goes up that high, maybe I'm pipe dreaming. And then my goal is 40% of my position, I'm just going to hold. I'm not going to sell at all. And if it ever goes up even higher, I'm not going to miss out. In fact, the passive income streams on that would be ridiculous. You just make really good bank just off the passive income alone, right? Maybe it doesn't do any of that stuff. Maybe it tops out a lot lower. But if we can get to those higher levels and I take out my risk capital, at that point, it doesn't matter what it does. It could do anything. There's other risks too. There's user error, there's hacks, there's, you never know, right? There's other risks. So taking out one's risk capital isn't always a bad thing at the right moments. This isn't a market where I want to sell on a double or, I could have sold and made some good money up at this high over here. But I personally, just for what it is and for where, not just what it is, but where it was in the market cycle and where it was in its own growth, I knew that it just had a lot more growing to do and probably a lot more bullish news events and stuff. So at the time, even though it had a big correction, I just felt like $2 really I'd be undercutting myself a bit. It's just my opinion. We'll see if I'm right or not. Maybe I'm delusional. Time will tell. We'll be able to come back and explore this in a year or so, or as we go on play by play. But, either over the next couple of years, I'm either going to look like a genius or an absolute fool. So time will tell. And that's the nature of taking risks in life and the markets, right? You either look like a genius or a fool, right? So we shall see. Time will tell. All right, folks, take care. I hope everyone has a great weekend. And we'll see what next week brings for us. See you next week. Oh, and my investing T0, I'd like to. A fellow Canadian reached out to me, said they tried to sign up to the exchange. They put in all the info and they said that they're not available to Canadians. I think it's an ERC20 token, if I'm not mistaken. There might be other ways to get some if it is, OTC or whatever. If anybody succeeds who's not in the States, if anybody succeeds in getting some T0, give me a heads up. I'd be interested to know. But yeah. All right, folks. Take care. Cheers. All right. Let's see where this goes. All right, folks. Have a great weekend. See you all in the trading room. I'll be in there if anything happens. Cheers.